Hey, hope everybody's enjoying their last week of April here. We have a lot to cover on this week's weekly webinar. We've got capital gains taxes here in Washington State. It's official, so we'll come back to that later. Some other tax changes on the federal level coming. Huge week in tech company earnings. And then, of course, Fed Chair Powell's conference on Wednesday as well. So we've got a lot to uncover. Before we jump right into it, my name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal each week is just bring you kind of the top stories that we're watching of the week and kind of shift out, some of the, the noise that we all hear in the media every day. So let's kind of get right into it. Again, we have a lot to cover, so I want to make sure to try and get as much in as I can within this kind of 10-minute span that we run here. So right out of the gate, we started the week with a lot of big company earnings. I think this week I forget the exact stat, but it was like a tenth of the S&P's market cap was reporting this week. We had Tesla, Microsoft, Amazon, Apple, Google, Facebook, Twitter. I mean, you name it, all the big companies were out. And it's very interesting. We had a lot of these, especially giant companies, really exceeding expectations quite a bit. A lot of huge earnings beats. And really, here we are Thursday at the close. We haven't seen a whole lot of movement up or down throughout that entire span. So, what does that really tell you? Now, some of these companies have had a pop and then kind of pulled back. Like there's been some movement for sure, but the broader markets haven't really moved a whole lot. So what does that tell you? I think it tells you that the earnings expectations right now are just so dang high that we've got to see these just ridiculous beats on the earnings expectations to really get any sort of pop out of it. I mean, this week was just insane. Some of these earnings beats, Apple, Google, Amazon, all just had great numbers. And really, again, when we look at the broader markets, we haven't seen much movement through it. Throughout this entire earnings season has been pretty strong, in fact, and really not a whole lot of movement. So it's very interesting. This earnings story is going to, I think, become more and more important as we look in the months, quarters, years ahead. I should say quarters, probably more likely. And it kind of ties into some of this tax stuff that we've been talking about. Biden came out, I think it was Wednesday now, and was introducing the idea of potentially bringing out a 28% corporate tax rate. So I think that that's important because if we need earnings to pick up to kind of continue the momentum, build off of what we've got so far in the markets, as you might imagine, if corporate taxes go up, that means profits may come down a little bit. Politics aside, I'm speaking purely from the market perspective. Obviously, that may mean a little slower growth moving forward at a time that we really need earnings to really show strong to continue to get market growth. So that's something we're watching really closely here. Outside of this kind of more macro or micro view on things, we also had consumer confidence come out on Tuesday. It was at about 121, which is up and really good to see. And then, of course, Wednesday was the big topic. We had Fed Chair Powell coming out talking again. And I think it was really interesting to watch it. It was kind of like, he kind of like crawled into his shell and basically gave us nothing. It was all, we're not going to do anything. We're not going to do anything. We're not going to do anything. And I think for those who, follow this weekly, know that, we're kind of concerned about this pushing everything off because when the time does come, if we have to rip off that Band-Aid, it may hurt a little bit. And so, the one thing I think that I kind of got out of it was that he said something about keeping basically that the inflation that we may see may be transitory. We're aiming for 2% and signs that it's going to exceed that for a period of time. And then he said something about the ability to control inflation. And I thought that was really interesting and kind of concerning because that means that he is fine with letting that go until a point where they think that it's gone too far. However, history has shown us that that's not really something that you can kind of put a cap on whenever you want. You may be able to slow it down a little bit or do something to kind of stop the snowball effect. But generally, when inflation picks up, it's going. So that's something really important to watch. And obviously, you may want to consider ways to prepare your portfolios for an inflationary environment. Areas that might do well in that type of situation. On top of all that, today, we had initial jobless claims. That was a good sign. We had 553,000 jobs lost. good sign versus where we have been. You know, last week I think was the first week we were down below 600, and here we are again. So hopefully that continues. And then we also had Q1 GDP numbers came out. It looks like we grew at 6.4%, which was just a little bit under expectations. I think we were looking at about 6.7 was the expectations. So, you know, all in all, kind of good things. But again, I think that earnings side of things is really, really important as we look forward, and something that we really need to watch closely and hopefully see these earnings really pick up because clearly the market has got some high expectations right now. All right, so moving into next week, there's a couple things that are really important coming out. We have personal income, consumer spending, sales, and inflation, and jobs numbers. So we have the ADP employment report on Wednesday, and then non-farms payrolls on Friday. So next week is just jam-packed. Now, the question of the week this week, I think, is a huge one. This week's question is all about the Washington State capital gains tax. It officially passed on Sunday. Here we are. Let's talk a little bit about it. Now, before we get into that, I want to share this is the last chance to claim your free copy of my new book, Retire by Design. And I really wrote this to kind of lay out exactly what is needed towards a thoughtful retirement plan. If you haven't gotten your copy yet, please do it today, as we're giving away these free copies through the end of the month for Financial Awareness Month. So I will include a link in the post below, and go ahead and follow that to claim your free copy today. We're really excited to be getting those out to celebrate financial literacy. So now for the question of the week. So the question of the week, again, is all about this capital gains tax here in Washington State. And I think the thing that I want to touch on is not necessarily the tax itself, but more so the changes. So I had written an article a ways back about this, and it has changed a lot since it's kind of made its way through the channels here. The most recent version, and the version that is going to Inslee's desk, basically is a 7% tax on any gain over $250,000. All right. So for instance, if you bought, let's use Amazon since we just dealt with their earnings. You buy Amazon at, let's say you had $100,000 that you bought into Amazon, and you sell it many years later at $400,000. That extra 50 basically would be, there's an additional tax on that extra 50,000 above that 250 mark. All right. So I think that's really important. You know, in our area, we have a lot of executives and a lot of folks in those companies, Amazon, Microsoft, Google, you name it, where there is a lot of compensation through equity plans. So this will definitely impact those folks, and may change a little bit in terms of how you plan on, using your equity comp. There are some really important exemptions to keep in mind as well. Retirement accounts don't, this doesn't apply to retirement accounts, obviously, because that's taxed based on the type of retirement account. Same with real estate, and as well, some smaller kind of family size, smaller family owned businesses would not be impacted by this either. So I just wanted to kind of share the new version because it has changed so many dang times, but this is what was approved just Sunday, April 25th, and has gone to Jay Inslee's desk for signature, which will happen. And then, the truth is, although this has passed, there is still a little bit of uncertainty. There's going to be some legal battles with this ahead. So whether this goes all the way through, what that looks like in the months to come, we shall see. But for now, the bill is passed. The tax is expected to start. So definitely keep an eye on that. And that version, 7% on gains 250,000 and more, is the version that has kind of made its way through. So I hope that is helpful. Again, claim your free copy of the book today. I'm going to put the link just below in our description here. And reach out to us if you have any questions as well for the question of the week. You can email us info@mainsailfg.com. Thanks so much. We'll see you same place, same time next week at 3 p.m.